Did you know that a group of stocks out there have the power to provide you with a steady income for years to come? These stocks have a secret sauce that sets them apart from the rest. Now, picture this. Imagine finding a stock that offers you a slice of the company's profits and consistently raises its dividends yearly. It's like having your very own money tree, right? And by the way, we're not just talking about any dividend stocks. We're talking about undervalued dividend aristocrats. These are the hidden gems of the investment world, the diamonds in the rough that have yet to shine their brightest. So, which are these undervalued dividend aristocrats, and what do they involve? Without further ado, let's get started. Number 6. Fortis, FTS. Fortis runs 10 regulated energy transmission and distribution utility companies in Canada, the US, and the Caribbean. They are in charge of supplying homes and businesses with electricity and natural gas, making sure we have the power we require. In exchange for offering these vital services, Fortis receives a consistent income. By providing these crucial services, Fortis earns a consistent income. And guess what? They often distribute a sizable chunk of its dividends to their shareholders. If you like the idea of low-risk, passive income yields, Fortis is the company for you. Here's where Fortis excels. The dividends make all the difference, even though the stocks may have returned similar to the markets. Consider this. Fortis has grown its dividends for a remarkable 49 years. That's an impressive accomplishment. And if it keeps up this streak in 2023, which is likely, it will become a member of the exclusive Dividend Kings Club of dividend growth stocks. When you look at the figures, they have boosted their dividends by an average of 6.8% since 2013. They now pay a quarterly dividend of $0.5650. That's a remarkable 88% increase from what they did in 2013. Their dividends and the 10-year total returns add up to a good rise of 112%, or approximately 7.8% compounded yearly. That's amazing. Their dividend payout ratio now stands at 81%. This indicates that just 81% of their shares' annual net income is used to pay dividends. The remainder might be put back into expansion of the company. It demonstrates that Fortis can focus on growth and pay dividends with ease. So why should you think about including Fortis in your investment portfolio? Consider it a solid anchor in a volatile market. Although it might not generate spectacular returns, it offers a consistent supply of revenue to safeguard some of your wealth in turbulent times. It's a good and dependable option for people looking for continuous income. Number 5. Johnson & Johnson, J&J. Johnson & Johnson is a global healthcare conglomerate that operates in multiple segments, including pharmaceuticals, medical devices, and consumer healthcare products. It's a household name with a rich history and a strong track record of delivering value to its shareholders. When it comes to dividends, they stand out as a reliable and consistent player. The company has been increasing its dividend for an impressive 59 consecutive years. But it's just not about the dividend history. Johnson & Johnson has a solid financial foundation and a diverse product portfolio catering to various healthcare needs. This diversification helps the company navigate market fluctuations and provide stability for its shareholders. Moreover, they have a payout ratio that indicates a healthy balance between dividend payments and reinvesting in the business for future growth. This demonstrates the company's ability to sustain its dividend payouts while continuing to invest in innovation and expansion. Considering the company's strong market position, global reach, and commitment to advancing healthcare, Johnson & Johnson offers investors an opportunity to benefit from both dividends and potential capital appreciation. See, becoming a subscriber of my channel is like holding the keys to a treasure chest of financial wisdom. Pretty awesome, right? So please subscribe. Then I've got a link hidden in the description that will lead you to my handy-dandy monthly budget trackers. They're designed with love just to make your money management a breeze. So make sure after you subscribe, you dive deep into the description to uncover these budgeting treasures. Trust me, your financial portfolio and your future self will thank you. Now, moving on. Number 4, IBM Corp. IBM. You may have heard that IBM was previously considered a fading legacy technology company. But guess what? It has been putting much effort into regaining its reputation as a pioneer in cutting-edge industries like blockchain, AI, and hybrid clouds. IBM is regaining its footing. The intriguing aspect of the company is its potential for the future. Though it may not be a machine for rapid growth, the company's sales in 2022 were $60.53 billion, up a respectable 5.54% from the year before. That's quite outstanding for a business founded in 1911 when William Howard Taft was the President of the United States. Now, let's talk about dividends. The company is renowned for producing substantial passive income. It offers a forward yield considerably higher than the average yield in the technology sector, coming in at 5.48%. Moreover, IBM has increased its dividend payouts for 30 years consecutively. Investors can rely on it for a consistent source of income. One should consider investing in IBM because it goes beyond the dividends. To position itself for continued expansion in the future years, they are actively pursuing and implementing innovative concepts, technologies, and processes. They're staying ahead of the competition by concentrating on cutting-edge fields like hybrid cloud computing and artificial intelligence. It's a corporation that knows how to adapt and evolve. Number 3, Atmos Energy, or ATO. Have you ever considered the delivery process for the gas that fuels your home or place of business? Atmos Energy, for example, is one of the largest natural-only gas distributors in the United States, servicing around 3 million consumers in over 1,400 cities spread across 9 states. Pretty impressive, right? You may wonder what distinguishes Atmos Energy from its competitors. Although the company does not have an awe-inspiring sales growth rate, it has an excellent net margin of 18.18%, better than the net margin of 83.16% of its competitors. The real kicker is this: Atmos Energy is a dependable investment choice because it has historically generated profits. When it comes to dividends, the company stands out as a dividend aristocrat that you should consider. With an incredible 39 years of uninterrupted dividend increases, the corporation has an excellent track record. That's right, 39 years. Better yet, with a payout ratio of 46.27%, it shows that it pays out a reasonable amount of its earnings in dividends while leaving room for potential future development. On the downside, even if Atmos Energy's forward yield of 2.5% isn't the most excellent yield on the market, it's still a return worth considering. And, well, investors and industry experts have noticed this company due to its well-established presence, steady profitability, and exceptional record of dividend increase in recent years. Number 2, Exxon Mobil, XOM. Traditional fuel companies are becoming outdated as the use of electric vehicles increase. But here's the thing: a complete transition away from hydrocarbons may not happen anytime soon. Because of this, ExxonMobil is still a reliable brand that investors look to acquire and hold stocks. It's undoubtedly a company to watch since international variables could improve its prospects. Let's talk numbers. Despite the challenges brought on by the COVID-19 epidemic, ExxonMobil has persevered. Its sales increased at a remarkable pace of 15.9% during the last 3 years, outpacing the industry's average growth rate of 65.02%. And regarding profitability, ExxonMobil outperformed its industry counterparts by 72.26%, with a 37% increase in the EBITDA growth over the same period. Isn't that incredible? Regarding dividends, the company's offered an attractive forward yield of 3.34%. With a payout ratio of 37.57%, it may not have the most excellent yield in the energy industry, but it is considered trustworthy. Even more impressive is the fact that they have grown in their dividends for an astounding 40 years in a row. This demonstrates the company's dedication to compensating its shareholders throughout 4 decades of steady growth. But what do analysts say? With a price objective of $130.54, they consider Exxon Mobil a moderate buy, indicating a potential upside of about 20%. That's definitely something to think about. Number 1. Kimberly-Clark, KMB. Kimberly-Clark is the mastermind behind names like Kleenex, Kotex, Scott, and Huggies. Without even realizing it, you've undoubtedly used their products. From diapers to paper towels, tissues to wipes. But what distinguishes Kimberly-Clark as unique? They have, in fact, increased their dividends continuously for an incredible 50 years. That is continuous growth for 50 years. The current dividend yield for Kimberly-Clark as of 2023 is 3.47%. It's understandable why they are regarded as the best dividend payers in the industry. The reason for their stability is that 1/4 of the world's population daily depend on their products. Many people rely on their reliable brands regardless of the economy's state. And because of the consistent demand for their products, Kimberly-Clark can maintain a steady increase in dividends they pay out, independent of any fluctuations in the stock price. Kimberly-Clark is a member of the esteemed group of businesses known as the S&P Dividend Aristocrats Index for their exceptional dividend growth. That is quite an achievement. The company is committed to improving its core brands as a major growth driver. They are not afraid to be innovative or to launch new products either, as an expansion or of existing line or as an altogether new offering. This means that as consumers, we will have more intriguing options. And that's not all though. They are adept at staying one step ahead of their rivals. They are in a leadership position in the market due to their brand strength and presence in countries worldwide. Their secret lies in clever advertising and ongoing innovation. They spend over $1 billion annually on advertising, R&D, and development to ensure that they stay on top of their field. Given Kimberly-Clark's commitment to expansion and its dominant market position, we may anticipate even bigger things in the future. And that's a wrap. But before we part ways, let me leave you with a question that will keep your curiosity burning. Imagine this. What if you could secure a steady stream of passive income by investing in these hidden gems? It's an enticing possibility, isn't it? Remember, the world of finance is teeming with opportunities, waiting to be seized by those who dare to venture beyond the ordinary. Thanks for watching. Don't forget to leave a like and subscribe, and I'll see you in the next video.